Welcome to a special RIMScast video presentation. I am your host, Justin Smolison, the Business Content Manager here at RIMS, the Risk and Insurance Management Society. Today's episode is sponsored by Prudent Insurance Brokers. This episode is Climate Change and Insurance, a fireside chat with Dave Bhutani and Deepak Madan. Deepak Madan is the head of the Large Accounts Practice, and Dave Bhutani is the Vice President of the Large Accounts Practice at Prudent. Today, we will discuss what the risk and insurance industries can do to remain resilient in the face of climate change and also explore parametric insurance solutions. Deepak Madan and Dave Bhutani, welcome to RIMScast. Deepak, Dave, we have seen a continuous increase in the trend related to climate change. Can you let the audience know about climate change as a risk and how India in particular is exposed to this risk?
Thanks, Justin, to have us on your podcast. Before we get into the real impact, let's understand what various reports have to say. According to World Economic Forum Global Risk Report 2021, the failure to mitigate and adapt to climate change is the most impactful risk facing communities worldwide, ahead of even weapons of mass destruction and water crisis. As per Swiss Re Institute, the economic losses are growing at remarkable 5% rate, and this is rolling average. Insured losses at 4.7% and uninsured losses at whooping 70% in the last 10 years. Going a step further, and if we look at data last 50 years, 5 out of 8 events causing casualties and 10 out of 12 costliest NatCat events have taken place in last 20 years only. It is evident that it is Earth's rising temperature that is fueling longer and intense heat waves, more frequent droughts, heavier rainfall, and more powerful hurricanes. The ocean temperature is getting warmer too, which means that tropical storms can pick up more energy. In other words, global warming has its ability to turn a Category 3 storm into dangerous Category 4 storm. It is difference of relative rise in temperatures that is causing these impacts in the form of climate change and resultant impact in the form of natural catastrophes. Coming to the regional distribution and impact of these events. In 2020 alone, 34% out of 274 events, 60% of casualties, and 35% of world economic losses have taken place in Asia.
As far as India is concerned, 321 catastrophic events have taken place in India in the last 2 decades. That is only third after China and USA. And India has suffered huge $80 billion of losses, economic losses through these events. Most unfortunate aspect is that only 8% of these losses were actually insured. So you can imagine for a developing economy, more than 90% of losses not insured. Now, it's not a coincidence that how India is exposed to these natural catastrophes. According to a paper published by VRisk back in 2012, 80% of India's land area is subjected to one or more perils, be it earthquakes, cyclones, floods, drought, tsunami, or monsoon, etc. So whether it is due to type of rocks and their layerings of Himalayas, or India's location at an intertropical convergence zone, the uncertainty and impact of climate change for India is intense.
So in your experience, what are organizations doing about managing this catastrophic risk, and how is Prudent acting as a leading broker in India to help its clients manage it better?
Now imagine the vastness of exposures for individuals as well as organizations to this climate change as a risk, and the fact that it has hit us in gradual and certain forms anywhere, anytime. The question is that, as risk professionals, what are we doing about this risk exposure? Or taking a step back, are we even aware of how we as organizations are exposed to it? Now, from our experience, we have seen that design of greenfield investments do include elements of modeling around the return period of floods, cyclones, etc. But there is need to revisit existing asset base with similar approach, primarily because the risk landscape has rapidly evolved over the last decade or so. Organizations are finding it difficult to measure the impact of these climatic events using traditional risk management tools, and B, certainly the vastness of this impact is making the conventional insurance solutions proving to be inadequate. At Prudent, through our risk consulting and loss prevention practices, we have started partnering with our clients to identify top locations, basis the NatCat vulnerabilities and value at risk, followed by modeling exercise. Now, what it does is that A, it delivers alert and impact assessment. B, it enables a graded response mechanism commensurate with level of intensity of the event.
So how adequate is the coverage under traditional insurance solutions, and what do organizations need to do to keep the increasing cost of insurance under control?
So traditionally, such catastrophic risks, which are low probability and high severity events, have always been preferred to be transferred onto the insurance market. An organization generally buy coverage for act of God events that can cause damage to property and impact on business continuity. Now, NatCat risk in the more frequent form leave the risk managers with two questions that are A, are all climatic events going to directly impact their own assets on locations, or it can impact the business continuity wide impact on their customer or supplier's premises. While answering this question, one would find that the moment you start stretching the imagination towards possibilities beyond their own facilities, that can impact business continuity beyond their own or losses to their own assets, the traditional insurances will start falling short a point onwards. Given traditional insurance solutions only indemnify you, are we in a position to quantify the impact of climatic events or disruption, demand on your goods or services, or supply of raw materials within your country or even outside the country of your operations? Hence, under traditional insurance, it's very important that organizations quantify this and correlate this to the event and then seek indemnity under traditional insurance solutions. We believe that for the losses that are contingent in nature, one needs to evaluate creative alternate risk transfer means such as parametric solutions to complement the traditional ones.
Now that's interesting, creativity with risk transfer solutions. Can you tell the RIMScast audience a bit about parametric insurance solutions for natural catastrophes?
Well, parametric insurance solutions have been into existence for a considerable time now. The word parametric draws from the word parameter or index. Parametric insurances is an innovative way to offer coverages to trigger-based events as compared to indemnity-based conventional insurance solutions. For example, a parametric policy for cyclones might provide a set payout whenever wind speeds exceed a certain intensity. These triggers and payout matrices are custom built and pre-agreed. The interesting aspect is that such solutions depend on modeling of geolocations and the losses sustained by organizations from the climatic events in the past and the forecast future vulnerabilities and probabilities of such events. As a corollary to this exercise, the organizations get data which they can leverage to put in place a robust tracking and response mechanism. Incidentally, some sections of industry have direct dependence on natural resources such as renewable energy, or if we go a little more micro, banks lending to the farmers have been buying parametric insurance solutions or weather-based derivative solutions for quite some time. But certainly, it is time that corporates evaluate this as a solution for their unaddressed areas of risk. The top three benefits of these solutions are: one, it is flexible solution. Second, it works in a transparent manner. Third, and importantly, the settlement is almost instant.
Finally, Dave, tell us, how can the RIMScast audience find out more about parametric insurance?
Our audience can reach out to us at consulting@prudentbrokers.com or click on website www.prudentbrokers.com, and we will reach out to them as appropriate.
Deepak Madan, Dave Bhutani, thank you so much for joining me on this special video presentation of RIMScast.
Thank you.
Thank you.
Thank you, Jim.